Okay, welcome everybody to the Smart Money live chat with the Warren Buffett, the Richard Branson of Canada, Mr. Sean Black, coming to us live from, what was it? You're in,
Mississauga.
Where?
Toronto.
Mississauga. Okay, Mississauga. Okay. Fantastic. All right, so I can see there's a little bit of greenery now. You got everybody.
Yep.
Sean, I think the problem with the market has been the last few months that now that they let everybody out of their house, there's been a slowdown in micro caps. Everybody's outside, they're at the lake, whatever. But the big opportunity right now is everything is really starting to take off. The summer rally has started. This is the thing we've been talking about for months now, but now it's started. This is it.
I agree, Jack. And it took a few years of doing this, even for myself to learn the cycles in Canada. How some of these micros trade. And finally it clicked in. This is the first summer, I'll be honest, where I was able to really take advantage of, the sleepy season and, not only do some homework on some of these, enjoy I just got back from a cottage myself, but to be piling into some of these names that were way oversold, just ignored, and several of them that are about to hit their inflection point. So the buying opportunity it created was incredible. There's someone out there that I listened to it for a few years, him say it, Jason Spatafora, call him the Wolf of, I think it's Wolf of Wheat Street or something is his ticker, or is his handle. The guy's been right every friggin' year. He says, go away in May. I didn't listen to him the first couple of years. I'm like, oh, he's just saying that. He just made it up. And he was right. And every time.
Not last year. Last year, because of the COVID thing, threw things
off. A little different, but years in a row though, like the certain tickers, whether it was the cannabis space or certain small stuff, it just didn't have the same, buyer's attention. And this year was the best example of it. So thankfully, I was sitting with a significant amount of dry powder on the sidelines for this event, and there's been several names that you have. An affiliation with that I've participated in a material amount this summer. In the last 2, 3, 4 weeks.
Yeah, this is really there's been it's interesting, as you know, the way you make money. It's basically the price you get in at. That's really what makes the profit. And last year, the biggest winners that we launched all started this last weeks of the summer, July, August, early September, PKK, fans. I mean, I can go through the whole list. CloudMD, Logiq before the $14 run up, and right now it's the same. It's like what's that, Groundhog Day or something? We're starting to see this, and I think so. I want to focus on our favorite stock, which I want you to kind of give you the in plain English explanation of TBP, which again. The reason I have you on here is because I think TBP has the potential to be our first 100x. We've had a bunch of 10xers, 10 baggers, 20 baggers, 50 bagger. I haven't had a 100 bagger yet. I'd like to have a 100 bagger.
Yes, I think so would everyone in your audience. Absolutely.
And I think it only needs to go. I think we introduced it at 17. So if it goes to $17, that'll be 100 bagger. And the crazy thing is this. I know people say, "Oh, it's hype, it's all this." No, listen. This is we've already had 8 of these 10 bagger plus in the last 18 months. So all these winners, they all have one thing in common. They have several things in common. And TBP, and I want you to explain in your own words because I think you're really able to articulate this much better than me, and I would say much better than anybody. The investment concept, the thesis of TBP. What is the path for this to be potentially 100 bagger? And not everybody wants to hang on for 100x because look, let's be honest, it might take a year and a half to get to $18, but it could be a $2, $3 stock in 6 months. Some people want to get out of 10x. Let them.
Yeah, Jack. It's interesting to say that. There's 2 things I'm going to say. First, I want to say, I was thinking it a lot when I was away, and I was looking at, some of the stuff in my portfolio, and some of the ones that I've been introduced to through yourself or through Wall Street Reporter, and you can find some great stuff on here. For sure, you need to take it and then do your due diligence and take it to the next level. If you're going to actually consider making the investment. But PKK is one you mentioned on here. I'm not sure what price you introduced it at. I wish I knew.
35 cents, so 70 cents with the split taken into account.
So 70 cents, it's $8-9, trading range now, and it doesn't seem any signs of slowing down. I think fintech is incredible. There's a lot of people who would never heard of PKK if it wasn't here. I invested heavily in another fintech deal. I love the category. It's but it's great to see it on your show. And there's a few other ones. Early on, a lot of people found out about Skylight. One of my largest holdings by far. And
you got into Skylight a couple of years ago at 17 cents or something.
Yeah, no, less than that actually. And I was in it 2 years before it went public. Actually, I think about 2 years. And
you bought it, was it in the summer when you got into it during the late?
Yeah, exactly. When Brad was the CEO, was in a situation where he was needing to raise capital. It was quiet time. And being cash is king. And if you're sitting on capital when some of these CEOs need money, the deals get pretty attractive and buying opportunity. So Skylight was one of them. I believe it's going to be in 18, 24 months. I think it'll be one of the best stocks you've ever had on your show. Best companies that's been built. Then you look at another one that's more recent for me. I'd heard about it. There's All Street's Wolf, a handle that's out there on Twitter. He's excellent. Straight shooter. I heard him keep talking about this one, talking about it, and then all of a sudden, it was on your show, and I was like, I remember I reached out to you and said, this one's really interesting. I said, Jack, can you introduce me to the CEO of Visibility? I said VSBY. I said, there's something there. I said, but man, it's really hard to understand. That story is excellent, but I got to make sure what I'm hearing is correct. And so I got to spend some time talking to the CEO and get to know him, and I become a significant shareholder in that company. I think it's been so de-risked now. It's on fire. It's at an inflection point, and it's gonna be a lot of fun to watch into the fall and into the winter. So then and I say the same thing about Tetra. Tetra is certainly a passion project for me. I never got into it thinking, oh, this is going to be an overnight flip. I don't day trade. It's not what I do. I invested in Guy. Invested in his entire platform. His plan, which was to provide initially, it was all about pain and providing pain relief and alternatives to opioids. That was something I was able to really get behind. And if you look at what's happened here recently, it's like, oh, the stock's moving, it's getting pumped. No, it's not. First of all, the stock's so undervalued compared to what they're sitting on today from IP and patents. I think it's incredible. But a company, it's one thing with Guy saying, and a guy, company from Ottawa, and a guy from, a Frenchman from Quebec says, hey, I have a better method of pain relief than current forms, which is predominantly oral. He goes, I believe, his entire platform and thesis was that through inhalation, he can provide safer, quicker pain relief to patients around the world. Everyone was like, yeah, whatever. You know what I mean? It's like crazy Frenchman. You know what I mean? They didn't give him any credit for what he was saying. All of a sudden, you get a company, and their chief, I think, lifestyle officer and their chief medical officer and their CEO coming out and quoted in the last week and making a major acquisition in the category, saying that inhalation is safer and it's quicker. So Philip Morris is looking at it and investing massive amounts of money based on inhalation. And I know lots of people for sure thought I was crazy early on, calling this one out, saying that I believe Tetra will, in time, realize they've been at it at a fraction of the time that a company like GW has. But I believed, based on everything I read from Raymond James and some other major analysts, that Tetra had a chance to provide a safer, quicker pain relief to patients around the world.
And Sean, I think we should emphasize that when it comes to the whole biopharma investment, it's everything here is really, it's about playing the odds, because look, there's a certain there's a certain percentage probability that this will get FDA approval, right? There's a certain, and as the company, as they climb that ladder of clinical success, the trial success, better and better data comes in. The stock, as you said, it gets like de-risked, and all of a sudden they hit those milestones, and then the stock gets repriced.
That's
so
right.
And it could be $1.50, $2, $3. They don't even have to have revenues for years.
It's a very different type of company. You know what I mean? Like some companies are valued based on revenue purely. You know what I mean? Like really purely based on revenue, and it doesn't matter whether that's because they don't have as much proprietary stuff. Like let's say a Skylight or something like that. They take care of patients. But then you get into something like Tetra, where the value creation moments that they go through is as they de-risk the investment not for them, not just for us, but how they de-risk it for big pharma, an LP, an MSO to come in and either partner with them, acquire them, license something from them. Those moments, every time that Guy, moves it forward, gets trial results, gets a patent on something, he can, which gives them, 5 years, minimum of exclusivity, proprietary on it. Nobody can touch him on some of his stuff that he has. Those are value creating moments. So everyone, a lot of times retail, just looks at it and says, well, when's he going to bring in revenue? When's he going to be in revenue? And the funny part is several of the things that Guy has, like, yes, I do believe one of them, I do believe they'll get their first DIN number probably, I'm going to say Q4, Q1 at the latest, but that will put them into revenue, and that will show that they can take something to market. But the number one thing I think that actually does is tell pharma that Guy has the ability to take something from, start to finish. It's not about, because once he gets, trial results here on a phase 2, and he de-risks it, I think it's quite likely at that point that either you license them, you JV on them, or the company's sold. I actually don't believe, let's say something as big as Calms or as Quicksleaf, several of them, I don't think he'll ever get to market, because the moment he demonstrates he can get it to market, he becomes a threat. He's not a threat as a company until he demonstrates the ability to get a drug to market. Because, if you're a major big pharma, if the guy's not a threat, he's just a pimple on the elephant's butt, like, why would you cut him a check for $1 billion or $2 billion or $3 billion? You don't do it. You have to have a reasonable belief that that drug is going to come out, and it's going to either replace something you have, or take away some of your sales, or provide you a sales growth opportunity. Other than that, you never lend credibility to anything he's doing. If anything, I think along the way they try and discredit everything he's doing in the cannabinoid space, and hope he goes away. You know what I mean? Because they'd prefer not to write him a check, for sure. But do I think at some point in time,
the pharma business is ruthless. This is
absolutely. They hope that most of these small companies, biopharmas, die on a vine. They really do hope that. And I believe there's several.
What's the path? Sure. What is the path for this right now? Because I think what everybody really wants to know is, okay, what's the path for this to be a 10-bagger from here? Let's say to be a $3 stock. What needs to happen?
The two platforms he has, one is pain. So, he's going to come out here. The most recently, when he expanded his trial to go against, fentanyl, morphine, hydromorphine, like those are some of the most, deadly opioids out there in the world. So he comes back here shortly, and says, yes, first of all, he wouldn't have accelerated the trial, because no pharma accelerates a trial and increases the burn on cash unless you're really confident in what you're doing. You'd have to be an idiot to go and spend more if it doesn't work. You know what I mean? Like, that's a guaranteed you're getting fired. And so him accelerating it recently was huge. Those results come out. That's a phase 2 that demonstrates head to head that he beat them. It's game over. And remember, he's not trying to prove. He's trying to provide an alternative. First of all, he's not trying to prove that. It's so superior that what he's trying to do is demonstrate a faster route to pain relief. So if you look at the Philip Morris news, they came out and said, we believe it's safer and it's faster via inhalation than oral. So the whole platform, what he did, was just validated by Philip Morris. Like, that's why the stock's been moving, in my opinion. Recently it's going up. No kidding, it's going up. He's just showing people that, hey, I'm not actually crazy. I'm going after this, and if I'm right, somebody's going to have to pay me. You know what I mean? Because he has patents on several parts of it, on the composition of matter, some of the pieces that are out there. Some of these cannabis companies, imagine if you're an LP, and I think one of the best fits for them is Curaleaf. You know, if you're them, or if you're a Tilray, or you're one of these guys, they're dying to get global access. You know what I mean? Like, that's the number one thing. Like, all these big LPs can't access the United States. But if you have a DIN number, you have an FDA approval on a drug, all of a sudden they can dominate the United States. You know, I mean, these people can get a prescription for it. You know, I mean, they can write it off and get their health insurance to cover it. That's what it's after. It's global access on one approval. So pain category for him is massive. That's one platform. As he goes to phase 2, I believe as soon as he gets phase 2 results, I believe he monetizes the drug. I think he JVs or he sells it. I don't.
When do you think that'll be? When do you think that'll be?
First half of 2022.
So not about 9 months from now, roughly.
I think, you know, I mean, he's probably six months out. You know, I mean, they're probably having to, you know, like the trial should be done. I'm going to say Q1. Okay. And whether he releases preliminary along the way, halfway point, anything, I'm not sure yet. I knew that, you know, I mean, if I saw him personally, if I saw him accelerate it, I knew it was go time. You know what I mean? And then he did do that. He came to the market and said, I'm accelerating this trial. And the FDA's approved expanded research on it. You know what I mean? So they can go do the head-to-head against, first it was only against morphine. And then much more serious drugs, they approved it again as well for hydromorphine. And I believe it's and fentanyl. So those are two significant pieces. I think there's a lot of people around the world that are there. You know, I think, you know, you give them credit as well. Like recently they filed an application with the NFL just to be associated and have a chance with it. I actually think it has nothing to do with the potential $1 million grant they would get. I think them applying, you know, to provide, you know, to assist in a trial and with NFL players to for pain. Like, you know, there's one gentleman out there, Delvin Breaux, former NFL player with the New Orleans Saints. You know, he screams it every day. Like, these NFL players are like, they're living in real pain. Like, he's posted a ton of information on it. You don't think there's some of them that would love to live beyond their NFL years, not in dire pain and, you know, taking real heavy opioids? So that's, you know, that's what he's after, I think. But as these pieces are going to continue to add credibility, I want to, if I could personally do it, whoever the gentleman is from Philip Morris that sent out the press release and did the first M&A deal in the category for inhalation, I'd like to send him a thank you letter. And, you know, that for Guy, keep de-risking it, keep moving this forward, because that's the value creation events I'm after. I'm not looking for him day one to start creating revenue off of Quicksleeve. You know what I mean? That, you know, I'm looking for him to monetize it over the next 12 months.
Yeah. So basically, I think like as we get into that, you know, first quarter of next year, we could see the stock moving towards that $3 range. I mean, it's, you know, it's not going to happen all in one day. It's going to probably, you know, might go to 50 cents.
Yeah, that's just on the Bain platform.
Yeah.
The antiviral platform. When I was on here before, that piece is, I mean, like, some people paid attention, some people didn't, but Guy posted it. He showed that it, you know, I mean, he came out and said, based on the work being done with George Mason and, you know, university and NIH, that it had antiviral properties. You know, so the only thing he's waiting for is an IND sign off, which allows him to go ahead and inject the patient. As soon as he injects a patient, he's, you know, I mean, it's going to demonstrate very quickly that, you know, something that 1 in 5 people die from every year is sepsis. You know, more people die from sepsis than COVID. So he's on the verge of being able to inject patients. Now, I believe that one will get the attention. The ARDS trial will get more attention to pharma, to be honest. And I think the LPs and MSOs are paying more attention to the pain category at the moment. But I think the pharma, the moment Guy injects somebody and he saves somebody's life from sepsis or from COVID, I think, you know, he'll have pharma partners lining up around the block.
So really, basically, look, what makes this compelling, I mean, just from kind of my standpoint, just as from a layman's perspective, is, okay, the market opportunities that they're addressing are in the, I mean, there's several it's a couple $100 billion, it's 200 something billion in potential market opportunities that they're addressing. and they have a decent shot of getting some traction, either getting an approval or getting to some hitting some milestones, which could make this a billion-dollar company at minimum. So from here, that's a 10x easily, right? Yeah. What I like about this is that this thing has had a lot of doubters over the years, and now we're kind of and everything, all these things, everything, history kind of may not repeat, but it rhymes, and it's like we're TBP right now is exactly where PKK was last year, where MD was in the last weeks of August. People didn't care. All of a sudden, things started kind of moving up a little bit, and then everybody comes back from vacation, September, October. By then, the stock has already doubled, and then everybody starts FOMOing, chasing, and then the things go parabolic.
That's right. But the thing is, Jack, he doesn't have just one drug, right? Like, I'd be much more nervous looking at a biotech company or anything in the biospace, and it's all or nothing. They only have one horse in the race. Guy has one that's in for final approval to start sales, which is great. He has a multi-billion-dollar drug in ARDS that's waiting to inject the first patient, but has already come out with one of the most reputable programs in the world, which George Mason, NIH, come out and say that it worked. Based on their initial tests. And then you go in the pain trial, any one of those work. And I think people have to be crazy to think that there's not a real chance that he's going to demonstrate quicker and safer relief on pain. He's not trying to say it's the only one, or it's better, or then it's opioids got to go away. He's just trying to provide an alternative, a safer alternative, and assist in the pain, especially with patients with cancer. Which is where the initial trial is based. But as soon as he shows it on a cancer patient, you don't think it's the amount of cross indications it's going to be for is going to be incredible. So any one of those things, he's not a one-trick pony.
So there's a pipeline of drugs, but also that's the big thing is the
it's a pipeline.
Off-label. The
off-label sales, incredible.
Off-label use is going to be the big thing.
Yeah, off-label use is incredible. But for me, looking at this company, first of all, I knew I'd have to be patient. But I knew the risk versus reward could be potentially life-changing. If he gets any one of these single drugs approved, I think even the DIN number, I think the stock's going to move dramatically. If he gets ARDS moving forward, that's the one that one of my friends was the founder of TerraSend, was the first one that said to me, he said, if he gets that approved, that's a unicorn. He goes, in the pharma world, and he's from the pharma world, he said, that is a unicorn drug. And I was like, are you really? And he was the one that led one of the financing rounds. So for the average investor, don't get me wrong, something could go wrong in any one of these drugs, but I believe along the way, Guy has de-risked them dramatically. I think he's got pending, material de-risking moments coming up here in Q3, Q4, as well as into 2022. And as he does that, it's one of the stocks that unfortunately, it's not just trade based on revenue or based on metrics that, from the last quarter. It's going to trade based on approvals, or you wake up one morning and there's an M&A deal announced, or there's a licensing deal announced, and, the stock is up 100, 200, 300%, and you're going to be going, wow, maybe I should have, I would have had to buy it and be patient. But, in my portfolio, there's certainly a percentage of my portfolio that I'm willing to take the home run risk on. And if it involves helping people, which I believe Guy is genuinely trying to do, then yeah, the Tetra's. That's why I've been a strong supporter of Tetra for years now.
Sure. So speaking of the portfolio, I think what everybody wants to know is how big is this portfolio? We're talking about 1 billion, 10 billion. What is the size of the Sean Black portfolio? And I want to get into what is the investment philosophy like? What is the if we can drill down the
two things. Jack say obviously I've been very lucky in business, and I've been able to redeploy capital from several of the transactions I've done, which has been meaningful for me and my family. But my philosophy changed a little bit for sure. Before I'd be a little more I want to say bullish, reckless. Early on, you go into a deal and you pile into it. Without really having all the info. It'd be based on just what a friend said or what somebody told me. And then I've had more time to spend on doing, my own due diligence. And, yes, I may hear a great, recommendation or a great name or a great, a CEO on your show that does a great, presentation. Well, the next thing I'm going to do is I'm going to ask for a call with them, and I'm going to start talking to them, and I'm going to start understanding it, or talk to some other shareholders. and see at what point of the journey they're on. You know what I mean? Are they still in the proof of concept stage? Are they at the inflection point stage? You know, where are they at? And I'm okay taking a flyer on an earlier deal because it's got real promise. But then as they de-risk, I'm much more likely now to continue to add to the deal as they've de-risked. You know what I mean? I understand I'm averaging up because sometimes, yes, it's the 100 bagger, it's the 10 bagger. But you know what? If you average, a really strong number in your portfolio and you've increased your size based on as they've de-risked, I believe that's a real learning curve that as you mature as an investor, you start to do. So every time, several of your tickers, as the revenue climbs, the profitability climbs, their bank account grows, I think it's okay to average up.
You know what's
I know
crazy?
people that have done it recently with your PKK play. I know lots of guys that have averaged up, as they've de-risked.
It's very difficult for most investors to buy into a stock at like a higher price. It's interesting because Ron Barron, the guy, money manager in the U.S. I think the guy, I don't know how he met. What's his fund? I mean, the guy's already he's on the Forbes 100, multi-billionaire. He got into Tesla. I think his initial investment in Tesla was like in the dollar range, like in the low dollar range. I think he sold it at like $50 or $100, and he said, "Wow, I'm like a genius." Everybody, because the thing was a 100 bagger, basically, right?
Yeah.
And then the crazy thing is this, right? And then I remember seeing this on CNBC. He was on and said, "Hey, I got back into it." And he got back into it, like I think at the 150, 200 range. And it takes a certain personality to get out of something at 100 and then get back in and take another shot, and he thinks it's going to be 2,000 plus 5, whatever it is,
Yeah, you know what, Jack? I went for a walk with one of my neighbors the other day, and he was telling me a story recently where he did a deal, and he took some money off the table as the stock started to move up. He was pretty happy. He took out a significant 7-figure sum, and he sold it to one of his friends and neighbors. And the guy kept piling more into it as the company was growing and the stock was growing. And he goes, yeah. So say it was, you take out $1 million in a transaction. He goes, like a year later, that was worth 10. You know what I mean? As an example, right? So the other neighbor, he has to buy the beer. You know what I mean? Because he kept adding into the name. He had the conviction in it, and he kept adding as it was growing and de-risking the investment. So, it doesn't always work for everybody. Some people are out of dry powder. They just can't. It's not for everybody. But I think it's okay. I think, as they've grown and, you see an opportunity, maybe there's been a pullback on the stock or something like that. That's something I've definitely learned patience in these names.
Sure. I want to get to some audience questions. We're kind of running out of time here, but I want to get to some audience questions. So here's the big elephant in the room on TBP. You know what that is, right?
Yeah.
Is TBP, would they do another financing? Because I think people they're like all paranoid. Oh my God! Every time they do a financing, this is the big thing.
I hope they do. I really do. I hope that between now and Christmas they do a financing. I'd like to participate.
Above $1 though, right?
You know what, Jack? It's a matter of how the money comes in, how the terms are, how they negotiate. What if it's a strategic that comes in? What if they're able to go out and attract a strategic based on some early results, or based on getting their first DIN number, THC DIN number ever issued in Canada? What if they get that and a strategic says, hey, I want to be JV with you, but I want to be able to have a piece of the pie. So I want to put in $5, $10, $20 million in the company. Are you interested? Yep, absolutely, right? So they secure the future of the company. That's what I would like them to do. So if they bring in capital on the way and help secure the future of the company, sign me up.
Question: do you think Tilray would put more money into Tetra? Or does that add anything? Is that of any?
No, the moment they become a threat, yes. Do I think there's they've been so focused on rec, and then Irwin the CEO has been really focused on pushing into the U.S. and rec. The moment they become a threat, and let's say they get THC sales going in the United States before Tilray being the largest shareholder at the moment of Tetra, and remember Tilray on average paid between $1 and I think $1.06 a share. And they think they own 20-some million shares as an example. Do I think that there's a chance? course there's a chance. Imagine if you can go to, if Guy could go to Irwin and say, Irwin, I'm going to have access to the United States in the next 12 months. Do you want to be my partner and launch the sales for QuickSleep? What's Irwin going to say? Potential multi-billion-dollar drug for pain in the United States. Of course he's going to do it. He's going to pay attention. So there's always a chance.
Sean, what are your current thoughts on Skylight here?
I've read materially in the last, one of the ones that Jack, we talked about the slow summers. I've been buying almost every single day for the past 3 weeks. I've been buying Skylight stock.
Really? Okay.
In a material amount.
Material.
I think probably the largest buyer of Skylight over the past 30 days. Myself and one other gentleman I know, we've been adding every single day. Almost, maybe 4 to 5 days a week, but I've been buying it.
Basically the volume has really dropped off. Essentially, I think my understanding is that essentially they want to focus on kind of like more of an institutional, relationships with analysts and all that. So there's not a lot of retail buying in the stock. So you might be the only guy buying right here in Canada.
I'm one of the only ones. But Jack, I'm patient though. I'm okay waiting 12, 18, 24 months. And if Pride can take that to a $20, $30 stock, I'm good. I'm patient. I don't care. I'm okay being the first guy to the party. Because I get the best choice of food. I can.
The chart is looking good. I'm looking from the standpoint. I think this thing is right here is kind of, this is kind of the bottom right here.
I've been in the 4 to 450 range, Jack. I bought a material amount of stock in the past 3 weeks.
Okay. Wow. Okay. There we go. Other Bob also. Bob is piggybacking on your trading.
Visby, I've bought a massive amount of it. I participated in the recent PP, and I'll hold on to that with, I'm sitting with that under my cushion. Both Skylight and Visby. The only one I missed of all yours recently, Jack, was PKK. I missed that one. That's kind of annoying. I wish you would have told me about that one before. Sure.
We got the next one. I don't know if we got a live stream with Logiq coming up. Which is they're in the e-commerce.
Nobody gets them, Jack. Nobody understands them yet.
I don't think. But here's the thing. Here's the thing here's the thing that which ties into they have a big operation in Indonesia with like a food delivery operation. It's like sort of like a Uber Eats, fintech. They have again, I think it's one of these things people don't quite understand it. It's a little bit like peak fintech or Visby. That's the opportunity. The opportunity is when nobody understands it.
That's right. And, my largest fintech holding is PBX. But I'd love to have a call with that CEO you're going to have on next and let him, tell me what it is. Like I said, I've been sitting on dry powder for summer. I've been deploying it significantly in a few names that you have. And like I said, Jack, you do a great job of, helping these CEOs, giving them a platform to make their pitch. And you get knocked sometimes as being a promoter and whatever. But at the end of the day, you're giving somebody an opportunity. What they do with that opportunity, that's up to the CEO. If Guy wants this thing and he wants to go get it and he wants it to be a $20 stock, remember, Guy has millions of share options available to him between $1 and $2. So I know every day Guy goes to sleep and I swear he has a tattoo somewhere on his body that says $2. Because until he gets there at minimum, he doesn't get fully vested on all his options. So he is heavily motivated. Yes, he gets a good salary, but if you have 15 million stock options at $2, you're going to chase it pretty hard. You know what I mean? So Guy, everybody wonders what's Guy after. He wants a real payday. He's going to take care of his family. I've seen the picture of the beach he wants to be on someday, and I hope I get to be there with him and have a beer and enjoy it because it's been a long journey. It's going to be a lot longer, but the payday, like, you can't expect a 10, 20, 50, 100x to come overnight. And the guys that got into Shopify had to wait, and I don't mind waiting.
No, what's that? There's a great little graphic we showed before, which is like, everybody thinks, the path to to the moon, is a straight shot, a little smooth ride. In reality, it's like up and down roll. It is.
Look at peak fintech. I watch a couple guys that are out there that talk about it all the time, and like you said, that was 30 cents. So 70 cents on the reverse, But now it's it's an $8 stock. You're going to turn over your float sometimes too, Jack. Like the same person that owned that thing at 30 cents. Was excited about it. That might have hit $1. They might have grabbed the holy crap bar, and been like, I don't want to own a dollar stock. I've never had one of those in my portfolio before. So you're going to turn your float over sometimes to a different investor. You're going to pass the baton, right? And there's next guys that are going to buy it on the next leg up.
Yeah, because here's the thing.
It's been de-risked, so they'll buy it then.
Yeah, there's a lot of like biotech pharma investors. They don't want to buy a stock under $1. So like to them, it's like, oh, it's a penny
Some
stock.
can't. Some can't. They can't access it on a certain exchange. They're not even allowed to hold them. Certain institutions, if it's like $1.50, $3, and some of them there's
$5.
And you got to remember, a lot of people can't buy it on margin on those numbers either, so they won't touch it because it's not marginable and it affects their overall what they can access in their account. So a lot of guys won't touch those stocks. So now all of a sudden, that's why PKK I think is moving more now. They're de-risked and larger money can access the stock because it's over $5.
Sean, so what is it? What was there was some drama 3 months ago with the financing. What's the change?
No, I wasn't. I didn't like the terms. I mean, I didn't like the terms. I didn't like the way they backed into it with the bank that was in play. So how they handled the financing doesn't change my opinion. I mean, Guy knows I was mad at him. I gave him an earful. About how they handled it. And
I think everybody who's watching it was mad at him for doing the deal because the stock was ready to go to $1, or 75 cents. It was ready to go.
Yeah, they left at least 30 to 50% on the table from another leg up before they did a financing. But when they pulled the ripcord a little quick, in my opinion, and so was I bitter? Do I still give him a hard time about it?
As some people say, yes.
I do give him a hard time about it, and I always will. Always remind him of it. But at the end of the day, did it change though what he's doing?
Listen, when the stock is $18, I don't think anybody's gonna care what happens.
Some guys won't be around anymore because, like I said, they're gonna turn over the float. Some guys will be long gone. I'll still be one of those guys holding, and I'll still remind them when it's time when we celebrate. Hey, I left money. It cost me money back then, so you're buying the beer. But do I think it's at the end of the day? Hopefully, he learned from it when he does his next one. That's all I can ask is give him a hard time, educate him how he impacted everybody, and give him a chance to do better on the next one.
Okay, so but the bottom line is, I think for the next financing one, it's going to be a much better terms. I mean, this is like
I do believe it is, and it was better last time than it could have than the previous time when listed warrants and all those things. So he did listen, he did learn some, but there's always room for improvement.
Yeah, but in other words, I think the big fear that I think some people have, what it is? I think there's like old timers in the stock. People have been in the stock for a long time, and
they have
that fear of financings.
They have a nervous twitch. When they spend the money, what do they do with it? Do they return value on it? And also, you remember that I think a couple of those financings and stuff like that, and the heat that they took, that led to some changes on the board. There were material changes on the board, and they upgraded, some of the individuals that are much more vested. They're much more. They want to be around for the future. They're not part of the history. They're part of the future. So those things changed. Someone asked me what changed. Lots of things changed, actually. Even the CFO nice guy, but not somebody that hires to work for me. He left as well. So there's been some really good changes at the company. I'm really happy about that.
Sean, okay, okay, so we're actually out of time. I'm going to ask you one last question here. This is so basically, and I think we should do we've got to do an interview later where we have more time because these things can go for like 5 hours. This could be one of these. We'll have to get some of the Unibrew beers. What's the beer that they make? The Montreal. What's the one they make? Fin du Monde, right?
All right.
We'll have some Fin. Okay, so basically, so you've had a massive success in the restaurant industry in Canada, right? Mm-hmm. And there is rumors that after you sold that deal, you're piling money into the next deal. Can you talk about
it? Yes, there's one that's out there that my partners from the restaurant space joined a board. Someone I know and respect very much that used to run one of the bigger pet food brands up here, owned by Mars, the Mars family. They have an incredible team at VEGN. Plant & Co. I think those guys are, working on a business plan, working on strategic, both inorganic and organic deals and revenue that they'll deliver. But Jack, it's like when you're building a real business, just like in our restaurant business, it took us 20 years, but we built a real company that with a lot of money. So it wasn't an overnight success by any means. And when you build a real one that's with bricks and mortar, and it's got a foundation that that'll create generations of future revenue and jobs. you don't do that overnight. So Plant & Co. is not an overnight. I tell people it's not a penny flip. It's not a pump and dump. If I hear anybody say it, I literally call them out and reach to them directly and be like, don't do that. You know what I mean? They're building a real business there. Give them time. And you got some of the best minds in the business. And remember, one thing that's key about the guys that all joined that company, they took no salary, none. They only get paid when the stock goes up. So you want to talk about alignment with shareholders? The Plant & Co. is unbelievable. You know what I mean? Like it's the best alignment you could ask for. Do I think they'll get there? Heck yeah. I put my money into the deal. They call me, they need anything. You know what I mean? They can, not only can they drive by my house and knock on my door, but they can call me on the phone and I'll help them any way I can. But do I think they're going to be successful? Yes, I do. But you got to be patient. They're building a real business.
Okay. Question is TVP your biggest position?
TVP and Skylight are right neck and neck. I would say VisB and PBX are next in my list, are right up there.
Okay, and can you say how many shares of TVP you own now? Is that a secret? Is it north of 1,000 shares?
North, way more north than of 1 million. There's a lot of shares, Jack. You know what I mean?
Okay.
I think I'd be one of the larger shareholders in the company for sure, next to Tilray.
Okay, excellent. So, Sean, on that note, I want to thank you. We're gonna move to our next interview, which is going to be Logiq. This is LGIQ, which is now trading in Canada. So everybody in Canada, which by the way, I think this is one of the catalysts for that stock, is that in Canada, people are into these, lower price stocks. In the US, OTC, it's like dead. It's
That's right. Yeah.
So
all right. I wish you luck with it, Jack. And anytime you want to talk about Tetra or any of these ones coming up, I know Guy told everyone to keep their, the phones by them in the summer, and I believe he's working on it.
And the summer's not over. The summer's not
over. You know what I mean? I don't know when it, you know what I mean? But Q3, Q4, I think are going to be a lot of fun. I think we're going to make some money. I think he's gonna de-risk the investment further, and make the people that stick around. He's gonna make some people happy.
Okay, fantastic, Sean. Thank you again. Always a pleasure. You got a big fan base here. We gotta get you a Wall Street Reporter hat. We're gonna get you a black hat with the Wall Street Reporter logo.
Like I said, I'm sure Remy will get one pretty quickly.
Fantastic, Sean. Again, thank you very much.
No problem.
Okay, let's get ready for our next exciting presenter. Here we go. Pull this up, Logiq. Okay. Brent.
Jack.
You there? Okay, sorry, we're running a little bit late. Listen, when the Canadian Warren Buffett is on, I can't, just cut the guy off. This is very important to the investor.
Yeah, and I noticed that he actually gets to wear a baseball cap on your shows. When I tried in the past, he said no.
No, you can only wear this. Here's the rule: if you're a regular investor, or if you're running like a psychedelics company, then you can wear it. Otherwise, that's
the buttoned up e-commerce guys.
If you're in the e-commerce, you can t-shirt maximum is the. Okay, so Brent, let me just do a quick, make sure I get everything ready here. We got a lot of people here. Okay. All right, welcome everybody to Wall Street Reporter's next super stock, a live stream, August 12th, 2021. We are back with Logiq, now trading also on the New York Exchange, as well as the OTC, same symbol, LGIQ, could be our next 10-bagger. So Brent, with that in mind, I want to kind of jump into it. We're running a little bit late, so I want to get right into the heart of the story here. Is investors want to know what is going to make Logiq go from $3 and change US to $20, because I think there's been talk of this being potentially a $20, $40 stock. I think if you get to 100 million run rate revenues, you would get that value. Right now, you're at 38, 40 million run rate. Yes,
that's correct. That's right.
What needs to happen? I want to focus on what you need. What's going to be the path? How are you going to get? Can you get to that 100 million in the next 12 months? If you can get that velocity to 100 million, the stock is going to just take off like a rocket.
Sure, you're actually, you're right on. I think to answer that properly, I'd like to make an analogy, which I think people can now or after the presentation, they can take a look at. There's another company that we were introduced to last year that trades in Toronto. They did their IPO up in Canada about a year and a half or so ago. Lightspeed, it's LSPD. E-commerce space, but they do more of a point of sale type product. But when we were talking to investment bankers last summer, we were introduced to them as a potential partner. I think their share price back then I know it was around $10 or $11 a share, trading at about 4 times revenues. The most we ended up doing with them is we put them on our comp table. So, when we show that chart that shows all the valuations of peer companies, they're on there. They're currently trading at 46 times revenues. Now, I actually just looked this up yesterday because last time I was on, you were asking specifically about M&A. How can we grow? How can we justify?
So here's the idea is that, okay, so this Lightspeed was last year trading at 2 times the revenues. The multiple expanded, so it's 46x. So, I mean, the stock is, I don't know what's the stock. The stock went up.
It's $117 now, so it's up 11x.
11x, okay.
Huge valuation, $11 billion. Now, I bring them up because at 4 or 5x, people who bought in, when it got to 10x, maybe they started feeling like, okay, it's doubled. Have I missed the run? I mean, there's always. Okay, so if you look at what they've done, because this is a path that we've already started following, and we're about midway there. So at about $20 a share, they made an acquisition. Share price went up to 40. They made another acquisition, 50, another acquisition. At 80, they made 2 acquisitions that were almost $1 billion in size with a combination of stock and cash. And now they're at 117. So they've clearly justified those higher valuations on the way up because they made smart acquisitions. They bought privately held companies that were at multiples that were lower than where they were trading and considerably lower than where their peers are. So you can absolutely justify a higher valuation if you make smart and accretive acquisitions. So in the past year, we've made 3 acquisitions, predominantly of tech and predominantly to round out our platform. So what's next? Well, in the process of doing those acquisitions, we've been introduced to and have been consistently shown new opportunities of companies that are not so much tech oriented, or IP oriented, but more sales and marketing, existing customer channels that would benefit from our platform. So we can absolutely start as we increase our valuation to make acquisitions of companies that are accretive and justify a higher valuation. So you can pursue this path. I mean, Lightspeed clearly did a hell of a job.
Yeah, you can follow the same. It's the same, and it's not like this is actually you start on that model, way before. But so the bottom line is this, though. So here's the investment opportunity as kind of I see it, like just from an investor's perspective. Okay, you're trading at basically 2 times revenue. The multiple is 2 times revenue.
That's right.
You got the stock. So you're generating. Let's just call it 40 million revenue. You're trading at $80 million valuation, whereas companies in the same e-commerce fintech space are trading at 10x. So which
actually 23.6.
23 or even 40. I mean, there's guys trading at 40. 50.
Yeah. The average is 23 and 23.6. But
actually, so 20x is okay. So even 10x is low. So if you just catch up, so if Logiq just gets that just from the valuation gets to the peer group valuation, right? That's just one of the paths for the stock to be 5 times higher than it is today. So roughly, did I do my math correctly?
10 times, but that's okay.
Okay, so 30, whatever. Listen, whatever it is, it's because these things always go. They either the market they either overreach or underreach. So it's at least I think a $20 stock. There's a path to get to a $20 stock. So let's kind of unpack here right now. You're operating in kind of 2 businesses, right? You have a kind of this e-commerce. You have the U.S. business or North America focused.
North American business. That's called Data Logic.
Okay.
Very simply put, companies that are already online need to find customers because they're competing against Amazon and eBay and Walmart. So
it's a digital marketing. You're sort of like a trade desk. You do the same type of stuff, basically.
we do now, yes,
Yeah.
but the focus is different. I mean, for Trade Desk, they just came out with their quarterly results. They did $250 million in revenues this past quarter. I mean, staggering, right? But they've got a huge market cap. They've got big margins. Their stock's been tremendous. But just by their very nature, as big as they are, they serve Amazon, they serve Walmart, they serve Target. They've got all the big e-commerce players who have a minimum per monthly spend on advertising of $100 million a month minimum. It's actually in excess of that, but that's the minimum they look at, and at their size, they have to. So for us, we have the same platform that they do now, which we have just completed our integration internally.
But for small to mid business, though, right?
Exactly, because those are the ones, and there's over 500,000 of these that have to compete with Amazon and Target and Walmart. How do they do that? They certainly can't use the Trade Desk tools. They can't use Google's DB360 tools because they don't have the big enough budget. So for us, what do? All right, well, can we take someone with a $10,000 or $100,000 a month budget or $1 million a month budget? Absolutely. And is it profitable for us? Yes. And in return, what do they get? Well, they get full transparency of what their ad dollars are spent on. They get a full look at what their return on ad spend is. And it makes them repeat that because they have a definitive return on ad spend, which currently it's really hard to do. There's a black box that your money goes into, and you don't know exactly how effective it is. Trade Desk customers do, and we've got that same functionality. So the data logic side of the business does that. We've got a specific focus around small businesses, but we're also taking a bit of a different approach. With 500,000 potential customers out there, you have to have a lot of salespeople. So what we're doing is, instead of going after individual small businesses, we're going after mid-size ad agencies that have those small businesses already. Oh. And in 2 months, we've already aggregated 12. Our target for the year is actually 20. Each of these serves between, call it 50 and 200 customers each. Some of them larger, of course. So that's our path towards scale. And the scale is absolutely there. I mean, people say, "Wow, e-commerce is so big. How much bigger can it get?" No, e-commerce is only 20% of retail. It's going to be 90% of retail in 7 years. So e-commerce is absolutely growing. Ad tech is absolutely growing, but what's challenging is for these small businesses to compete against the guys. Look, 5 companies control 53% of the whole e-commerce space. What does that tell you? What about those other 500,000? It's so spread out and just so fragmented. It's a huge opportunity for us, but Trade Desk doesn't come down the chain to compete with us, because what are they going to do with someone spending $100,000 a month?
No, they can't. No, it's a different market. It's a whole different system. So.
That's right. And for us, that business is extremely compelling because we carry 60-70% margins on that business, and it's fantastic, which is why we did it.
Margins. So speaking of margins, so here's the thing. So apparently, the thinking is, which is probably true, is that the reason why the multiple has been very low until now, which is 2x, why you're trading at only 2x revenues instead of 20x or 10x, is because historically or in the past you've had low margins. Now your margins are so. There's a couple of, I think right now with Logiq, there's a couple of things happening which are going to, which are catalysts for the stock to, be trading at a much higher price. Well, number one is, which sounds very simple, is the fact that now you're trading in Canada on the NEO exchange, which opens it up to, even though Canada is not a massive country, I mean, for a stock like Logiq, you don't need that many buyers. Like, it's a very thinly traded stock, and I think it's a much better market than OTC. So that's already starting to have a positive impact. We're already starting to see more volume in Canada. So that's one, right? That's just one little thing. It's a cosmetic issue. Number two is, the increasing margins. As people see that your margins are increasing to be, true like ad tech, marketing tech, e-com type margins, big margins. Then all of a sudden they're going to give you that 10x multiple. And then number three, I think, is the potential, the blue sky potential of those acquisitions that you could be doing. And I kind of want to go back to the acquisitions later, but let's talk about margins. I know it kind of sounds boring for a lot of people, but what are you doing to increase your margins to those, the juicy, big tech type margins?
Sure, that's a great point, and you're right. And we tell this story every day. I think the average investor out there doesn't really get why gross margin improvement is important. But to put it in perspective, last year this time we were at about 15% gross margins on a consolidated basis. Right now we're nearly 30, so we've more than doubled the margins. So how would you simplify that? Okay, so last year we did roughly 38 million in revenues. That would be like doubling your revenues at the same margins, because you've doubled your margins. So, yes, this year over last year, you're going to see roughly flattish revenues year over year, but we've doubled the margins, which is important because, as you just pointed out, there were two reasons that we traded at a depressed multiple: OTC market and margins in the teens. With the feedback I got when I spoke to analysts and spoke to institutional investors was, well, you guys don't carry the type of margins that most companies in the e-com space or ad tech space carry. You really need to focus on that. COVID gave us an opportunity to do that. We cut off the lower margin business and started to focus around higher margin business on the Logiq side, which is very simply put, getting offline businesses online in emerging markets. They're all on the mobile phone, not on desktop computers. Our platform is all on the mobile phone, not on desktop computers. So that's what's different between us and Shopify or BigCommerce or Wix.
And that's the business, Logiq. That's the business that you have in Southeast Asia and in Indonesia.
That's correct. Plus, we do some other fintech stuff there too, which has a value which is actually probably pretty close to our market cap, but is not reflected in the market.
Oh, that's number 4. That's catalyst number 4, which we're going to talk about, which is the possibility of you spinning off that Indonesia business.
Yeah, that's right. Before we get too far ahead of ourselves, I would encourage everyone that's listening now to listen to our earnings call next Monday, because we will be speaking specifically not only about the quarter, but about initiatives that we're kind of touching on now, but I can't be entirely specific about until we report the quarter. But yes, we are absolutely intent on extracting value for that business. And I would say that now is probably an amazing time to do so, because just in the time of the past 3 months, there have been 3 announcements on Southeast Asian companies going into SPACs. Minimum size deals, $2.5 billion. The biggest one is $45 billion.
Indonesia is a red hot market. I mean, everybody wants to do this.
It's the hottest emerging market right now. It is. We've been there.
That's the last one that's been left. That's the last opportunity in Asia, really. Indonesia.
Well, there are some other ones, but they're a little politically unstable right now, like Myanmar.
Well, I mean, big ones. I mean,
Indonesia, that's right. It's the fourth most populous country in the world. But look, anyone having doubts about the validity of the market, I mean, look at SE. It just crossed $300 a share. When I started on your show last year, I think they were 30 or 40, but yeah, they're up huge. They've got a $200 billion market cap. That's all Indonesia. And that was a Morgan Stanley IPO. So if anyone thinks that Indonesia is this backwater that doesn't attract any real institutions, look again and look at the announcement on Grab and Altimeter Growth, the SPAC. That is a $45 billion deal. That's the biggest SPAC transaction in history. These are not little tiny companies. And we've been operating there for five years. And we know all the people there. We know all the companies valued at $1 billion or more. We're not there, nor did we ever intend to be. But our whole goal from the beginning was become relevant, build out a footprint, and so that when foreign companies that desire to operate in the region want to come in, what do? Well, they partner with you, they make a strategic investment in you, or they acquire you, or they scale into you. And so that's where we are now. And could we do it? And will we do it? Yes, absolutely, because that's been on our roadmap for a number of years.
Okay, so what's the possibility that you're gonna spin off this Indonesia business? Because that's actually, I'm thinking like as a separate standalone company, that could get a valuation that would be equal to what you have now. It could be 100 million plus. Because how much business is that doing, the AppLogic side with the deliveries and the fintech stuff?
The whole AppLogic side is there's two types of business. There's the type that we generate revenue on, and then there's the type that we generate transaction volume on. Because if you look at valuation metrics in Indonesia and actually Southeast Asia, they take the latter approach where they calculate the gross amount of transactions, and then there's a multiple of that. On AppLogic, it's a little more classic as things are here, where it's a multiple of revenue, net revenue, not transaction volume. And so, revenue attributed to AppLogic or the app itself, call it 10 million in revenue. Which is on our books. The gross transaction volume that comes through the e-wallet in the delivery has been as high as almost 30 million pre-COVID. Central Business District in Jakarta, which is our main focus, just went into their, I guess it's fifth or sixth lockdown, because COVID's still very much alive and well there, unfortunately. It's pulled back a bit. We're doing the audit now, which has unfortunately been a little slower. But if you want to ask about what would implied valuations be, probably between, on the very low side for the Indonesia business, about 20 million, and probably if you look at realistic valuations, between 60 and 78 million. And if you add in AppLogic's Create app, probably another 20 to 30. So there is an implied 100 million in valuation in an ideal scenario where we were acquired by a strategic. Yeah.
Okay. Or could you spin it out as a separate public company?
We could, and I have friends that have actually just launched SPACs that have one listed yesterday, in fact. And do we talk with them? Yes. And are there others? Yeah, there's a lot of SPACs that are getting
dividend. I mean, you could dividend out that.
Oh no, we would. Yeah. So all right. Yeah. So keeping things simple. If we spin off the business, what does that mean? Well, if we go into a public company, we get shares of that public company, and ideally it would be on NASDAQ or on NYSE, or maybe we do an IPO in Jakarta or in Canada or in the US. Then those shares get distributed down to the shareholder level. So our shareholders of Logiq receive shares of that company. So it's fully transparent, and you would essentially have two pieces, which
you're getting a 2-for-1 here. So basically, you're getting a free gift. Like right now, this is it's incredible. Okay, we're kind of tight on time, so I want to focus. I want to close out on two things. One is I want to get to some audience questions here.
Sure.
We have okay. So these are actually very good questions. So Naveed is asking, now that Logiq has the margin, is the next focus for Logiq to focus on top line growth?
It is, and again, Naveed, I would encourage you to listen to our call this coming Monday. On the last call, we had given some guidance or targets, and actually there are two research reports out. One is Zacks, the other one is a gentleman in San Francisco, Christian Galati, who runs Phase 4 Research, which is 100% institutional. If you look at their guidance for revenue, which I think is pretty reasonable. They're looking at growth year over year, next year over this year, to be along industry norms, which is about 30 to 40% growth organically. And again, we've been talking about margin improvement year over year as well. As we've discussed here, M&A could change that substantially, because we have seen things where, look at it this way. We're under NDA with several companies now that we're taking a hard look at.
And you've built the business through acquisition. I mean, you've done what, 3 deals in the past?
Partly, yeah. I mean, we've had good organic growth. In do we know how to do M&A? Yeah, I spent 20 years doing M&A, and prior to that, I spent 11 years in risk arbitrage. So we understand M&A very well. I think with a higher share price and higher valuation, we've seen some things that, they're revenuing north of 5 million, 10 million, 20 million, EBITDA positive, private market valuations, probably similar to our valuation right now. And if we merge them in and we're carrying a market valuation that looks real similar to our peers, you get the uplift. And again, look at Lightspeed. I mean, they went from 10 to 117. They made 5, maybe it was 6 acquisitions, but it was a lot. And they did subsequently larger acquisitions. The last ones they did was almost $1 billion of acquisitions, when a year ago that was their entire market cap. So can you grow through that path, and will investors reward you? Yeah, absolutely. And real quick, I just want to touch on something that you mentioned earlier. So now that we're on NEO, I think that's been sort of a question mark for a lot of U.S. investors. It's like, why NEO? Well, in the past 3 weeks, I have every day gotten calls from or emails from wealth managers, institutional investors, and high net worth investors asking for calls with me and our CEO, Tom. And there's 14,000 wealth managers in Canada. All of these guys, see IPOs going on. They're all familiar with the NEO. So we've been busy talking to brokers, analysts, money managers, and we didn't see that kind of activity on the OTC. Yeah, that's been good. If you look at the volume, I mean, Jack, look at the volume in the past 2 weeks. There's a significant step up in volume on the NEO. And if anyone doubts the validity of the NEO, I just got something this morning. Google, Tesla, and I think it's Amazon, their Canadian depository receipts are on the NEO. They could have gone to Toronto, but they're on the NEO too. So, the NEO is setting things alight. I mean, they're kicking ass.
Well, I think it's going to make a big difference to have the shares available for Canadian investors, because realistically in the U.S., the OTC market really is kind of like a backwater. It really is. It's very difficult to have. There's very few real companies on the OTC. Let's just be.
That's true. So, I mean, I don't want to badmouth them, but you're right. It's really gone downhill. You really only have NASDAQ. That's a valid market in the U.S. So the fact that you're available for trading in Canada, on the NEO exchange, anybody can buy it. I mean, you can have institutions buying it, and they're much more. I think these guys are much more open-minded to a company like Logiq. Whereas in the U.S., investors don't want to look at big institutions. They don't want to look at $3 stocks. It's like they want to look at $20 stocks, right? So 50, So it's just like a lot. So it sounds very trivial, but it's not. I mean, it makes a big deal when you have, because you don't need that much buying from Canada to move the stock. I mean, the stock is very thin. It's like, I mean, it could be $12 tomorrow with just a little bit of activity. Okay, so in terms of M&A, you have a pipeline right now. It's a big pipeline, yeah, and it will continue because we have relationships with investment banks that specialize in nothing but tech M&A. So they're sell side representatives, and there's all kinds of stuff that we've seen on the private side that looks great. So yeah.
Okay, so I think that's going to be the big thing. Okay, Brent, let's kind of catch up with you in the first week of September. Hopefully, maybe you might have some deals by then. Maybe you have some announcements by then of some M&A activity. Because I think that really that's one of the things that investors really, at least in our audience, that they love to hear is just deals. This is what makes these things move.
Absolutely. And if you do it smart, you get rewarded. And Lightspeed is a perfect example.
Excellent. Brent, on that note, I want to thank you, and we'll see you in a couple of weeks.
Terrific. Thanks, Jack.
Thank you again. Okay, let's get ready for our next exciting presenter, Delic. Wait. Okay. Hang on. Okay, Delic. Okay, stand by. Matt.
How you doing?
Great. You can hear me okay?
Can you hear me?
Yeah, it's a little bit tinny, a little bit.
Better, worse.
Better. And I want to get you more into the frame a little bit, like tilt the. Okay, there we go. Okay.
Better?
Fantastic. Perfect. Okay. Let me get everything set up. Okay, perfect. Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream, August 12th, 2021. The goal of our program is to bring you those stocks which have that 10x to 100x upside. Today we are back with Delic, which is a pure play in the psychedelic space, and we're going to be talking about what is the path for this to be at least a minimum of a 10-bagger stock. So Matt, welcome back.
Thank you for having me, Jack. How are you?
Great. Matt, I'm starting to see these press releases about your upcoming event in Vegas.
Yeah. Meet Delic is coming November 6th and 7th in Las Vegas at a place called Area 15. It's going to be the premier psychedelic wellness event in the world. And we expect 10,000 people over 2 days. So it should be really amazing.
So we've talked about this, I think, before a little bit, and I want to kind of start with that because I think it's going to be a very big deal when this happens, which people, I don't think anybody kind of quite understands how big of a milestone it is. So this is really the first kind of like serious psychedelics conference, business conference in the US.
That's right. And we really feel strongly that, this is an explosive growth industry. And being at the center of it is incredible for deal flow, customer pickup, and just, really amplifying the message that we are best in class in psychedelic wellness. So it gives a kind of a trifecta of net benefits for the company.
No, it's a triple win, and again, meet Del. And again, this is not just like as a you're not doing this just for as a hobby. I mean, this is basically this is part of the media business inside of Delic as part of Reality Sandwich. The events business, which I mean, I don't know if you're going to break out the numbers, but some of these events are making well into the seven figures. I mean, you've done that before with High Times. That was a massive business. Do you see this like this events business becoming like, I mean, could it become like a $10-20 million revenue business?
I think so. I mean, looking at, I built a mid 8-figure business at High Times around events. So there is clearly, as this nascent industry goes mainstream, there's going to be a lot of interest. There is a lot of interest. And just giving people a center point in, of course, Las Vegas, the place that is known for hosting all the large events. You look at, Comdex became a $1 billion business just running around personal computers. I think psychedelics are slated to become a multi-billion-dollar business. There's going to need to be a center point and a place for everyone to come together and mingle and share ideas and cross-collaborate. And I think we're still in that early phase of it where everything is collaboration. There's not a tremendous amount of competition because even people doing the same things are doing it in different directions, and it's all just helping, rising tide raising all boats right now. There is a huge opportunity to raise this tide heavily. So I'm super excited.
Yeah, so Matt, I don't think anybody in our audience is old enough to remember Comdex. They know CES, but basically it's a massive trade show.
Yeah, the largest trade show in the world for computers. Right?
Yeah.
And CES became the largest trade show in the world for consumer electronics. There's the Mobile World Congress. There's a lot of these things.
Big, yeah. So you're going to be the CES essentially of psychedelics.
Yeah, I think the idea is to create a central gathering point and have a critical mass of the leaders around the space in one place and bringing people together and getting them in a chance to be exposed to each other's thoughts, ideas, have that one cross collaboration.
And I've seen, because the press releases I've seen, you've had some pretty well-known guys who are going to be speaking. I know, I don't know everybody in the psychedelics world. I just know this guy, the Joe Rogan partner.
Yeah, exactly.
I know
Albert Marcus, who is Joe Rogan's partner in his supplement business, who's a very well-known and regarded wellness influencer. And yeah, that's part of what we're doing, is really looking at how psychedelics and wellness are coming together. And that world, that $1 trillion world of wellness, is really coming into the psychedelic space. And so we're leading and at the forefront of that, and giving people an opportunity to kind of interact and meet with these people and hear them speak. And these are folks who are running mainstream businesses, but this is their opportunity to talk about how psychedelics have helped them live a better life, have a better life, be more prosperous and successful, all things that people are looking for.
Okay, so this is coming up November, 10,000 people in Vegas.
Yep.
I think as we get closer to that date, I think there's going to be much more, like, investors will finally understand, what the value is for this. I don't think they've really gotten it. They don't understand it yet. As we get to the date, I think they'll realize how big this is. Okay, and that, again, that's one of the components of your media side, which also has the website, The Reality Sandwich. And again, I think we should emphasize, one of the things that you're doing there is you're going to be using that to get kind of reviews and data on what psychedelic experiences, which you could then sell to
exactly
the pharma business.
Yeah, and I think we've bought and rebranded Delic Labs. We brought on a full professor at the University of BC who's world renowned. He's taken a sabbatical for a year to come on and help us with our patent and IP development, which is pretty fantastic, Professor Glenn Samus. And we're in mid trials on some really interesting IP. And so the idea is we have this media platform getting 400,000 to 450,000 people a month, and we're really able to use that as a feeder, right? Because we have these clinics that we have open and are expanding, and people are looking for psychedelic wellness. So we're able to feed them there, and then as these products come online, we're able to bring people's experiences, have them log it into our website, and collect a massive trove of consumer data, which becomes very valuable.
So this is okay. So you got the and that's the third leg of the stool, which is the the second leg is the clinics, the psychedelic clinics, and then of course you have the labs. So it's really, you have this whole ecosystem. It's like an Amazon. You're getting the data. You're able to drive traffic to the psychedelic clinics. You have how many do you have now? Because I know you're going to be rolling out some new ones.
That's true. So we have 2 that are open right now, 2 that are in development, and some big deals on the horizon to help really expand. Our intention is to be the largest operator in America, and I think owning our own pipeline of people interested in this service is incredibly important, because most people are kind of at the mercy of these big tech platforms. And so we've spent a lot of time, effort, and energy developing our own platform where people are looking for it. And then we have a direct connection with our potential client. So we have emails, we have readership on the website, we have streams of the podcast, we have social media engagement, all of these things that allow us to directly drive people. And I think it's just, we have an advisor who ran a large chain of clinics, and he said the one thing that he could never get a hold of was a direct connection to the clients, to the patient.
What's interesting, man. I didn't quite, for some reason, we've been talking for months. I didn't quite click, but what you're doing is really very similar to what's happening now in the sports betting space, where you have the big gaming companies. They're buying media assets, or they see because the media assets is what drives traffic to the sport. Like, what is it, Fubo, which is actually a former next super stock, a Wall Street Report next super stock. So their big thing is, they have this live streaming platform. Yep. Whatever it is, this television, and But the value of it is that they could then run sports betting on it, could drive lead generation. You're seeing that happen, I think, with somebody's buying a company called Score. I think is it DraftKings or some. So you have that's happening in that space because they see the value of having that connection to the end user, and you have that with reality sandwich, the whole media side.
It's we spent all this time and energy earning trust and building relationships over the last couple of years with the readers, with the interested folks who are looking for more. Now we're able to convert them into people coming to our events, and then from there, people coming to our clinics. And I think as we scale out across the country, each of those customer acquisitions means more because the more clinics we have, the more people who are closer to the clinics.
It's a virtuous cycle.
Exactly.
And I think what's interesting is there's a real high value to having this in the psychedelic space because it's not like like with cannabis. I mean, anybody can smoke a joint and whatever. What's the worst that's going to happen? But psychedelics has a little more. There's more things where you want to have more. You know what I mean? Wants to have
you want to have a safe and controlled setting. And someone who can hold that container and make you really have a positive experience, because obviously, one of the issues that led to the war on drugs were people who were using it in uncontrolled settings and having terrible experiences, and then that small subsegment became the messaging that was the problem with psychedelics, that people freaked out or had bad trips and whatever the horrible thing that one person did once became the entire message. And what we say is look, with informed consent, with a safe setting and a proper healing mindset, these substances have incredible efficacy. Like our clinic chain that we bought has their own proprietary data platform for entering and monitoring patients, and they've seen 87% success, right? So these are people who are coming in who have been failed by the current crop of pharmaceuticals, who have treatment-resistant depression, anxiety that they can't hack, PTSD, all of these things, addiction, and they come through, and 87% of people are self-reported better within 3 months, and that's really amazing to me, and that just tells you the word's not out yet, because if people knew that, there'd be tens of thousands of these clinics around the country. And I think that's what we're at the very first inning of, is building out an infrastructure to handle the really huge flow of people who will inevitably come into this. I mean, you look at the suicide rate was 4 times its highest ever last year, right? So you have this is not like a logical question. This is not just a debate that you can go home from. This is people who are killing themselves, people who are losing their families, their jobs. This is people who are being crushed by mental health issues and have nowhere to turn. And we're giving them somewhere to go. We're giving them actual real hope and a place to not get stuck on a daily pharmaceutical that doesn't actually make you better. It doesn't treat the root cause. It only treats the symptoms. We really believe that psychedelic wellness is there to treat the root cause, the trauma that underlies most of these issues. And once you treat that, once you deal with that, look at that and go through it, there's so much healing on the other side. And I've just had, the testimonials from the patients that we've seen at our clinics is just unbelievable. We had one that was featured on CTV about a month ago. They did a big piece on us, and she, it made me cry. Like just seeing this, it's a very heart-centric thing to see people heal. And there's no other methodologies that are out there. So I just think it's so important to really make this widely available and let people know it's possible. And I think that's back around to the legs of our stool. Part of the media and event side is mainstreaming this knowledge, right? Because there's still a bunch of people who were taught this is your brain on drugs, and they think.
I remember those commercials. Yeah,
they were great. They were super catchy. Great marketing. And so they think any of these things are terrible and are going to destroy you. So I think it's just this huge opportunity to really get this mainstream awareness. So having people like Aubrey Marcus, having people like Jason Silva, having people like the folks who founded Compass, the largest psilocybin provider, husband and wife team, George and Katya. These people are helping mainstream it and putting them in one place. And we're also going to have a bunch of press there that get to talk to these. We have the guy who legalized psilocybin in Oregon coming, Sam Chapman. I mean, it's really a who's.
So one of the other things is that the legalization of psychedelics is really gathering pace on national or global basis. So there's a lot of tailwinds that are very bullish for the space right now. Super
bullish, and that's back to our lab, right? Looking at what we do there, we have this incredible profitable business where we're out. We're essentially the outsourced scientific brain for a bunch of big companies, helping them crack major problems, and we utilize their funding to do our own IP work. So when we do their work, we're doing incredible high level work for them, and then we have machinery and technicians and as I said, tenured professors together in one space who can then go after some really interesting IP. Because, like you said, the tailwinds are staggering. So, like Oregon legalized for therapeutic use, California and Colorado are both working on putting something on the ballot for 2022.
And one of the products that's going to be launched from the lab is the inhalable psilocybin.
Yeah, so we're mid testing on that, and hopefully I'll be able to disclose more about it. But it's super promising and really, I think, game changing. And back around to how we make this mainstream. You look at cannabis. What made cannabis mainstream? It was not only the work that we did, that I did at High Times, and pushing for that medicalization and pushing how it could change people's life and save children from Dravet syndrome and all this stuff. It was also consumer packaged goods, right? It was the CPG model coming in. It was the creation of high quality, easily digestible, easily dosable edibles. It was the creation of dosable vaporizers. It was things that allowed people to not be afraid of the reefer madness, the war on drugs propaganda, right? So it's like if we expect people to really take another look and consider psychedelics for their wellness and mental health, it requires dosability. It requires reproducible, similar, kind of qualitative results. So, to me, what makes it really super interesting is being able to come out with something that is dosable, that is controllable, that has a certain shelf life and a certain amount of time, that a half-life for your experience. So let's say you want to try this. Do you want to just eat some mushrooms and figure out if you're tripping really hard and it's scary, or it doesn't kind of work, or it's somewhere in between? Or do you want a perfectly dosed every time thing that exactly how long?
I think, and we talked about this before, but I think with when it comes to psychedelics, that the idea of having that perfect controlled dose experience is much more important than it is in cannabis, right?
Yeah. Oh, absolutely. I think it's super. It's like cannabis. When you come to it, it is a powerful substance, but still, it's not likely to overwhelm you. You might get. You might lay down on a couch for a while. You might have a little bit of anxiety if you smoke too much sativa. You might get glued to a chair if you smoke some indica. But you're not winding up having a 5-hour terrible trip where you don't know where you are or what's happening, right? So I think a lot of this is creating this safety cocoon and making people understand that we've got this. You're here to heal. And the susceptibility to hypnosis, self-hypnosis specifically under psychedelics, is what makes them such a powerful healing tool, because a lot of the issues people deal with are, of course, inside their brain. And if you can convince them to reprogram their brain, and if they feel like they have that opportunity and they get a reset of their brain, like ketamine resets their brain, there's an incredible opportunity to have a different life after the end of the journey or after a series of treatments, right? So I think that's what's so powerful. And the more people who do this, the more people who hear about it, the more people who see the science, the more people will be card-carrying members of this has to change. This has to be illegal, because no one wants their child to want to commit suicide. The reason that
the psychedelic clinics that you're going to have 4 shortly, but the idea is that when somebody goes in, let's say they have, you talk about this. So one of the things that you treat is this kind of untreatable depression, whatever.
Treatment-resistant
depression or other issues. Because, okay, so let's say somebody has, pretty serious depression, even if it's not resistant, but so right now they would have to take, pill every day for, I don't know, the rest of their life in theory, and it doesn't really do it. Whereas and there's also side effects, who knows what it can do to them.
Take another pill to knock out the thing and the liver thing.
Or they can go to your clinic a couple times, 2-3 times, and they're cured, basically.
Yeah, well, I never like to use the word cure.
Right, but
what I like to say is that they're able to come in and treat the root cause, and through the treatment of the root cause, they no longer need to take a daily pill. Now, what happens is life is still coming at you, so something can trigger you or make you feel like shit, and then that is where a booster from the clinic, where you can go back in and do another treatment, gets you back out of it. But rather than having to take a substance once a day with side effects, with low sexuality, with hair falling out, with your liver collapsing, and then having to take other drugs to balance those things out, you now take a course of treatment, you're markedly better, and then when things come at you, you're able to book a booster, come in, and then you're markedly better for months or years at a time, right? And I
think it's a very compelling thing for people that want instant gratification now, like millennials that want instant gratification.
Yeah,
they don't want to.
No, are you used to clicking on the Amazon button and it's there in 26 minutes? You're like, what the hell, man? What's with this friction? I can't deal with friction. It is a frictionless mental health procedure, right? You're coming through. You're not stuck on someone else's thing. And I've had lots of conversations with people with anxiety and depression who have been on these medicines for years, and the depression medicines make you feel you're unable to get high or low. You can't be excited, you can't have fun, you're kind of just in this foggy kind of haze. And then within anxiety drugs, if you're off of them, you feel so anxious you're going to die, and then when you're on them, you just don't want to do anything. So it's just like this. It's not a real solution. It's just hacking at the symptoms, but the underlying root causes are there, and every day you have to confront part of it. So I really feel like it is currently revolutionizing mental health. So
the path. Okay, so back to the premise of our program would be a 10-bag or 20-bagger type stock. The stock would need to be, let's say $5.
Mm-hmm.
$5 a share, and you have right now. Okay, so each of these clinics can generate roughly $1 million, and you have multiple paths to get to this thing. Okay, so roughly to get to, I think we talked about this before. If you're doing 25 million in sales, that could get you to that $5 valuation, because you have how many shares? That you're going to have
70-ish million fully diluted.
Yeah, and the stock is now what, 30 cents? It's like
31 cents.
20 million valuation, right? So if you have 15 of these clinics, right? That's each one generates $1 million a year.
Yep.
Yeah, that's worth 150 million. So that by itself is 10x plus on the stock.
Exactly.
Clinics, the lab side of the business, which is a little bit of a blue sky thing, right? Because we don't know what that could do. So it's a little bit,
Yeah, it has its own internal profitability and growth. So it's growing year over year. It's over $1 million run rate, and it's growing. It's profitable. And then it has a ton of interesting blue sky opportunities that could be tens of millions to hundreds of millions of dollars. And that's
right. So in terms of the data side, selling the data to, the
data, IP,
clinical data, which could be
product, each one of those things. You look at what PAX did, where they rolled out a cannabis vaporizer and just sold the pod and the technology and made tens of millions of dollars. So I think there's just a lot of really interesting opportunities here, and a lot of pivots that allow us to make a lot of money off of that side. And so, when you're talking about how we get to that, call it a $20-25 million.
And then you got the media side. You forgot the media side.
That's what I was going to say with,
10,
with media,
5 million, whatever it is. It's
with the media and event side. We really want to push this event business, and as you said, I have a lot of experience driving that to a 8-figure numbers, and I think this industry has that opportunity over the next 3 years. So I think collectively amongst and between the three things, we have a very clear path to a $20 or $25 million run rate in the next 12 to 18 months. So,
and that could be worth, in this business, the psychedelics business, 20x revenues.
Yeah, I think that's super realistic.
500 million valuation, which would be basically a 20 bagger stock. Yep. So
exactly.
Let's see. Do we have any questions? Malcolm asking, will clinic acquisition? You're gonna be buying clinics, right? If you're gonna buy some, develop some.
We have a buy and build thesis. So right now we're building. We just bought. So on the build side, it will be funded by organic operations with some of our current capital. So it's really, what's interesting about the business is once you have the expertise and the team, it's really only a couple $100,000 to get to profitability on one, to actual cash flow positivity on one of these clinics. So a couple $100,000 to get it open, and 6 or 7 months, and you start making money, which I think is a really interesting business.
No, it's a great model, and again, you can scale it. It's reproducible. The other thing that you have is you mentioned that your team, you're able to get these things paid for with insurance in the U.S. That's a massive deal.
Exactly.
Huge deal, because otherwise they have to pay for it privately, which is I don't know, $5,000. I don't know.
Yeah, like 25 to 3,000, 2,500 to 3,000 for 6 sessions. So. It's not insignificant, but then you look at the quality of life benefits, and a lot of people will pay it, and it is worthwhile and changes people's lives. So I'm not shy about saying we have a very affordable care package, and then we have worked with insurance to make it accessible to folks who maybe don't have the ability to pay out of pocket by utilizing some of these very long-term clinic running team members who understand how to interact and liaise with private insurance.
Okay. Can we have an update on the Homestead acquisition?
Yeah, of course. So Homestead is the original mushroom kit. So we've been working through some interesting product lines there, and think that there's a really, that's another part of the media business that gives a lot of upside opportunities. Building this huge readership and community allows us to create products that kind of sit inside of their interest and needs. We have
you're like Amazon. When Amazon sees something that works, they buy or they launch their own version of it. So because they have the data.
Yeah. Our data says people are very interested in cultivating their own mushrooms, as a lot of these states and municipalities have come out with, call it decriminalization or legalization, but haven't set up means for people to buy it. It really does look a lot like cannabis in the early 2000s, when there were a lot of places that had changed the laws, but no one had really set up what we call a naturalized distribution system. There wasn't a dispensary on every corner the way there is today. And so people, I have a friend who sold $30 million worth of grow boxes over the course of 4 years, because people needed to buy something to grow their weed in, right? And I think there's just such an interesting
Wow. Okay. So could that you think that you could sell $30 million worth of these grow mushroom kits?
I'm not saying that I will. I'm saying that I've seen it happen before, and I know that there's going to be a lot of these states and municipalities coming online as this, the tailwinds push more ethylene plants and psilocybin over the edge legalization. So I think there's just such an interesting thing and opportunity there. So yeah,
I completely, Matt, I completely forgot about this. This you announced this a couple months ago.
Yeah, in late February, exactly.
Right. And,
so, we have our team building out a new site. Yeah, there's some great stuff that's going to come out, and we'll make announcements about it.
What other acquisitions are you looking at? Because that's just one of what else? What else is in the pipeline?
A bunch of stuff, but obviously, I can't. It's one of those things I can't talk about, right? Because they're non-public information. But the pipeline is definitely well stocked, and we have a bunch of stuff that we think will really help hammer home the primacy of Delic as the infrastructure play for psychedelics. We think that there's such an opportunity to utilize our ecosystem to build this. We think clinics are going to be a huge part of this, and we think products are a huge part of this. And so you'll see some acquisitions come out that will really help kind of reinforce that thesis and show people that we're really thinking about how to grow to be the biggest in America.
I think like what you're saying, this is going to be it's going to become more apparent right around the time or right after the event in Vegas, because that is going to be like, when that happens, I think people are going to realize, wow, this company really is sort of the future of psychedelics.
Yeah,
and they're going to want to get involved.
I think it's a great opportunity for people to get in on the ground floor of what I think is a multi-year cycle of growth in psychedelics. And we only have one compound legal right now, just ketamine. Psilocybin and MDMA are not far behind, and then a raft of other compounds that you guys have never heard of. They're in phase 2 clinical trials. So the growth is I think at least a 5 to 7 year cycle of growth as new things come on, and all of them require clinic. You got to be in a space to do it, and we have purpose-built spaces, and we're going to have more of these purpose-built spaces around the country where people can come and really get that psychedelic wellness. And we have a great ecosystem where people can find out more about it before they go get it, and that brings them a level of comfort and trust as they figure out where to try this new and interesting way to hack their mental health. Okay.
Matt, on that note, I want to thank you, and we look forward to getting another update on Delic's psychedelics developments very shortly.
Thank you so much, Jack. It was a real pleasure.
Thank you again, and thank you everybody for joining today's live stream.
Have a great one. Bye.